Thanks for tuning in. We are at the WEF at Davos, and let's talk to a premier auto company, actually a premier group, if you will. From the COVID lows, M&M has rewarded investors handsomely, going over 4x, and the man who took over the reins in 2021 is with us, Dr. Anish Shah. Dr. Shah, thanks so much for speaking to us. Lovely having you.
It's a pleasure being here. Thank you.
Yeah. Well, let's talk about how you see 2023 to be, considering it's a year which is dichotomous in the sense that the Western world is going through a slowdown, but there is optimism around India and now with China opening up as well. So optimism around the Eastern Hemisphere. How do you see the dichotomy of these two pulls and pressures?
So India is better positioned because of some of the actions the government has taken very quickly in terms of raising rates proactively, in terms of some of the other things they did around export duties, etc. So that has helped keep inflation in curb. And as a result, we will feel some of the pressures. We're not going to be immune to that. But I think we will be better off overall. And we're seeing that in our businesses today. All our businesses are actually going great guns. And that's momentum that we will hope continues through 23.
So, M&M in the last 2 years has had some sparkling success across businesses. As a group, or as the man who's heading the group, where do you see the largest set of opportunities, India and globally, for the group, say over the course of the next 2 or 3 years, if it's possible to kind of talk about it?
So if I just go across our businesses, our teams actually have done a great job, and I would give all the credit to our leaders and their teams.
Sure.
The auto business has got tremendous momentum behind it with a few great wins, with the electric story coming in now. Our farm business, tractors, has done extremely well. Farm machinery is a great growth opportunity. Mahindra Finance is on a very good turnaround path. Tech Mahindra has done well, has to address margins, and the team is focused on doing that. We've got a number of growth gems that are on target to get to $1 billion of market cap each. We've had marquee investors like Ontario Teachers coming in on a solar business, enthused by the plans that we have, which is essentially to grow the business fivefold in the next 5 years. So we've got a number of businesses actually going great guns. For us, this year is to really scale up and continue to drive that growth.
A bunch of those guys that you spoke about, including Ontario, are at Davos. How have the meetings been? Because a lot of CEOs that I'm talking to, both global and India-based, are really talking about a lot of optimism despite the global growth headwinds.
Yes, India is a shining star here. There are questions though. So it is not, we haven't completely gone past those questions as yet. But those questions are being answered. And we are seeing investors,
for example,
wanting to, questions around ease of doing business. I think the government has done a lot to address that question.
But
that still persists in the mind of folks. And they've got to come and try things out and see how it works. Investors are very keen to put more money in India, and we've seen that across many of our businesses as well. So overall, the mood has been very positive. I think this is India's time, but the next 2 to 3 years are going to be critical in us being able to take those actions, be able to attract the foreign investment, and take us to that next step.
I mean, you've done fantastically well in autos, but I couldn't think of a more complex time to be in autos, the competitive landscape, the whole transition, and all of that. How do you see this evolving over the course of whatever number of time frame that you can look ahead to?
So competition in auto has made us stronger. That's frankly helped us or enabled us to build the products we build today. So we welcome that competition. That will keep us on our toes. We are well positioned today to be able to match and in fact lead our competitors. We've done that across multiple models that we've launched. So we're looking forward to this journey.
Well, I'm sure you are, but my limited point was, okay, so here's my question. 2022 was a banner year for you as far as the SUV segment goes. Now on that high base, you have to show performance in 2023 at a point of time when there's this whole flux happening towards EV, even though on the four-wheeler side, it may be a lot slower than what is on the two-wheeler side. How do you see 2023? Let's put it that way.
So we are starting the year with a very strong order book. We also continue to get a very high influx of orders every month for all our key models.
Yes.
We are in the process of doubling capacity in our auto business.
And even that won't be enough.
And even that won't be enough. So given that, we are starting at a good position today.
Yes. Then which is my question? When I look at the XUV bookings, right, versus the capacity that you have, you double it, you treble it, and still going by the run rate at which the optimism was, even around the electric launches, what do you do? Because there's an opportunity, but you probably go out of it in a measured fashion.
I think once we double capacity, we'll be in a very good place to meet the demand that's there. And then as electric comes in, we will add more capacity for electric. So that will be the path that we follow.
In which case, 2023, the base is high, but what will work in probably the auto industry's favor would be the fact that the input costs, like to like, year on year, will look a lot more reasonable than what they were. So does that make 2023 also a year of optimism?
That is clearly a tailwind that we will benefit from if that pans out the way some folks would forecast at this point. But I would go back to core performance right now. The ability to put in that excess capacity and then the ability to deliver the orders that we have today. That in itself will help us even though the base is high.
Okay. I haven't spoken to you enough, and which is why I'm tempted to ask this to you, and which is do you reckon at some point of time in the very near future, you would want to see some more rewarding to investors, whether in the form of divesting certain key businesses out of the umbrella group? Is that something on the anvil?
So we have made commitments to our investors and met every one of them.
Got it.
Right? We have also said that we are at this point not going to look at divestment of any of our core businesses. We feel that there's a lot of value in the businesses being together. Our farm business has the highest margins by far in the industry. One would expect that, given that we've got by far the highest market share. But our auto business has the highest margins in the industry. And we don't have the highest market share in auto. In SUVs we do,
Yes.
but not in the overall auto industry. So there are synergies that are in play right now.
Okay.
And we will continue to look at what is the real value of the synergies. If at some point in time we feel there's greater value in looking at alternate options, we will do that as well. But what we've seen today is that the synergy that we see across the group and keeping the businesses together actually builds much stronger businesses that investors should actually like and should want a lot more.
Last two questions. One is around not just your own company's capex, but the whole chatter around how private capex needs to come to the fore, because the government is doing its bit. Hopefully the private sector does it, and the private sector will only do it when there is sense to do it. My question is, do you reckon that 2023 would be the advent of private capex, or is it difficult to say that right now?
I think a lot will depend on demand. I think it is a question for each company to address. We feel comfortable investing right now because we're seeing a huge amount of demand. That's again driven by the products that we have. We're also comfortable in investing because we see a very strong storyline for EV. And while we've talked a lot about auto investment, we've also increased capacity in our farm businesses significantly. So for us, it's again based on what we're seeing in the environment, based on what we're seeing from our consumers.
What do you see in the environment from a domestic perspective? Rural selectively has been hurting. FMCG companies will say that, oh boy, it's hurting. You will say it is probably not showing for you. But I'm just asking, independent of what M&M would be thinking of, what are you thinking about the rural hurting? And the fact also, just the point that the last 1 month, I've heard a number of people who look at the economy talk about how urban seems to be showing a little bit of chink in the armor.
So we will see some weakness in the economy.
Near term, you think?
In the near term, as the global economy slows down, there will always be some pressure on India. In rural areas, agri has been a strong sector. And we've seen a good Kharif crop, a good Rabi crop. So that has helped the agri sector to actually do well. Other parts in rural have struggled. And that's something that we're hoping will turn around as we go through the year. But on balance, I would expect some spots of weakness in the economy overall. But I would also expect us to be much better positioned than the rest of the world.
The turn comes with the global economy turning, you reckon, whenever it does?
The turn will come with the global economy, but at the same time, there will be some tailwinds from lower commodity prices, from lower oil prices. So if the world does go through a recession, these are tailwinds that will benefit India.
Okay, very quickly, any budget expectations? The last question.
We've seen good budgets over the last 2 to 3 years, and they have been growth oriented. They have been focused on growing the Indian economy, and that's exactly what we would expect going forward.
But anything specific from a auto or any of your group businesses perspective, you would expect the government to throw up or dish out?
We feel very good about what the government is doing from a budget perspective right now, and as long as they continue doing the same, we're very happy.
Great. Dr. Shah, lovely talking to you. Thank you so much, and wish you all the best for the remainder of the forum as well as for 2023.
Thank you very much.
Yeah, viewers, thanks
Nice
for tuning
to meet
in.
you.